I think you can hear me out in this lavalier, right? Is that, everybody hear me? Very good. Well, thank you so much for two things. One, for having me here in Peru, your beautiful city of Lima, but more importantly, your beautiful country of Peru. When I had the opportunity to come down and speak to you all, we firmed this up about a month ago, and I mentioned to my wife, I said, you know, Peru, last time I looked, I think there's this place called Machu Picchu that's close to Lima. Would you like to go? And so we came in last weekend and of course went up to Cusco, and we went to a couple of the Inca ruins, and of course including Machu Picchu. What a beautiful country you have. So thank you for allowing me to come down and share that with my wife over the last couple of days, and the time we've spent here in Peru has just been a beautiful time. And secondly, the second thing I want to thank you for is indulging me in listening to me speak in English instead of Spanish. As similar to Paul, I have a father who was his lineage was from Mexico. He was born in the U.S., but as about a one-year-old, they moved from, or his family immigrated up from the Chihuahua, Mexico area, and he married a white woman, my mother, and didn't teach any of us 8 kids Spanish. So I appreciate you all indulging me and listening to me speak in English instead of Spanish. So thanks for having me, and I'm looking forward to sharing our experience in the U.S. and what we're doing in terms of trying to reimagine a payments capability for our country that will take advantage and leverage the technology that's available today and try to figure out how to coordinate across a very diverse economy in the U.S. to try to pull that new payment capability off. As many of you know, in your country and in our country, we have these things called credit cards, we have these things called check payments, ACH payments, wire payments, lots of different ways, as Paul was mentioning, to pay for things. And in the United States, we've been pretty good about being able to pay for things. To drive an $18 trillion a year economy, we didn't really have a big problem to solve, so to speak. We felt like in many ways 4 or 5 years ago that generally speaking the payment system in our country felt like it was functioning okay. So, but we started to think about 5 years ago, let's talk about what could be and what could we do in the U.S. to improve our current payment system capabilities. So we started at the Federal Reserve Bank studying what could be done differently. And it wasn't just the Federal Reserve trying to understand what we could do differently. We engaged the industry in the U.S. very broadly, financial institutions of all sizes, fintech companies like Bradley's company, many others in the U.S., PayPal, Google, Amazon, you name the list of companies we interacted with. We also engaged consumer advocacy groups. We engaged corporates and merchants about what improvements they'd like to see. So we spent a lot of time trying to understand what could change or what should change as we think about improving our payment system in the U.S. So leading up to this paper we developed in, I got to get my clicker, sorry about that. Give that advancer. Very good, thank you. Muchas gracias. So, leading up to this paper we did back in 2015, we did a lot of engagement with payment stakeholders in the United States, trying to understand what we should do different, and what should we do over the next 5 or 10 years. So that work effort really started off with a strategies paper that we issued in January 15. I'm going to talk about that here in a minute. But leading up to this discussion, there were many stakeholders in the United States said, you know, we think our payment system is fine. We don't need to do anything differently. The card networks, the financial institutions, no one was really seeing a case for change. So we did analysis. We hired some consultants to think about what type of payments would benefit from a quicker or faster capability than we had in the marketplace in the US. We looked around the world to see what was happening in other countries, and it became clear to us that around the world, a number of countries had already moved to implement what we were calling faster payments capabilities, and that maybe we should learn something from all of that. So we did some analysis, and of course, I have this nice slide here that represents the Western Hemisphere and what we saw happening, pertinent to the audience here, where there were 3 countries at least leading up to our analysis that in Brazil, Chile, and Mexico had some faster payments capabilities that were faster and more enabled than what we were experiencing in the United States. So we took the lessons here and the lessons around the world. The United Kingdom, for example, they had a faster payment solution. Australia was in the process of building a solution. They're about ready to implement and deploy a system. Singapore implemented their faster payment system in literally 30 months. It's a small country, but that's a lot of change to adopt in a very short period of time. So our analysis, looking around the world, said, we need to get on board with some change here in the United States and think about how to learn from what's happening around the world and try to apply that in the United States to see what we could do to improve our payment system. So I mentioned this leading up to that work effort that culminated with these desired outcomes in 2015. January or so, we issued what we called the Strategies for Improving the U.S. Payment System. And this was after all of this engagement with these industry stakeholders across the country that I mentioned. We all agreed, and this wasn't just the Federal Reserve idea, it was our paper, but this was the U.S. stakeholders saying, we agree on these 5 desired outcomes, what we want to see happen in our payment system in the United States over the coming years. So they were focused on 5 areas: speed. We want to improve the speed of our payment system in the country. Certainly, payment security remains top of everybody's list and will remain for us. And we also had the efficiency goal to continue to become more efficient in our payment system as anyone would. And then this international component that Brian talked a little bit about in his opening remarks. We have to get better at our cross-border transaction capabilities from a transparency perspective, from a speed perspective, from a cost perspective and complications perspective. We believe that we can do better in that space. So that was another area of focus. And then finally, trying to accomplish all of this through collaboration. The central bank in the United States, the Federal Reserve, does not have authority to mandate any of these changes or improvements in the U.S. payment system. We don't have that authority. It comes from our U.S. Congress in Washington, D.C. that would grant that authority. As we talk to all of our stakeholders in defining these desired outcomes, everybody believes that the last place in the United States we want to start in terms of changing something like a payment system capability is with the U.S. Congress. Because it's the last thing they're going to spend time on with all the other things that we're focused on in Washington. Payment system improvements probably is not going to make the top 200 list. So we all agreed that the way to do this in our country is to work together, bring all these disparate views and perspectives to the table, listen to one another, and see if we can't collaborate to make the changes that we agree need to be made. So that was the strategies paper in terms of the history. And as many of you can appreciate, with an $18 trillion economy and over 21 million businesses in the US, over 10,000 financial institutions of all sizes in our country, and all of the different commercial interests at stake, we have a coordination problem. If we want to envision and change a payment system that's going to work ubiquitously and safely, and of course in this case faster, we have a coordination problem with all of those different entities that need to get on the same page with the direction. Because when you're talking about a payment system capability, it's not something that 2 people can agree on. In our country, it's going to be thousands of organizations that are going to have to agree to make some of the changes that are going to be necessary here. So with all that complication then, we of course made the case for a faster payment system in the US. And clearly there are a couple of things that our current capabilities in the country do not address. And we tried to pull those out and show those to people and talk about them and everyone get agreement on them. So clearly it's speed. How can we have a near real-time experience of transacting business from person to person or from business to business, business to person, person to business, where the funds can actually be transferred from one entity to the other in near real time, 3-ish to 5 seconds, and the funds be spendable or good funds available for spending within 5 to 10 seconds, let's say. So the speed was a big component, but there's capabilities in the marketplace today in our country where that happens with the debit cards, for example. Very fast transactions that are in fact real time. We have wire transfers that are real time payments. But what other features and functionalities in a faster payments capability do you want? The other thing we determined was that there needs to be better transparency or capability to actually understand where your payment is. So you can feel good or confirm that you've actually made a payment to a colleague, to a business, let's say for your cell phone service, or for a utility bill if you're paying it at the last minute. You don't want your utilities cut off. So you want confirmation that the payment was actually made. So this, I kind of think of it as a FedEx or a UPS model in our case for transparency of where the payment is, so you can be confirmed that you executed the payment, and on the receiving side that you actually have the money if you need to spend it immediately. The third area, I think that from a faster payments perspective, as we thought about all of this, when I use the word we, I'm saying the collective in our country, not just the Federal Reserve. These are payment system stakeholders' views that I'm trying to represent here. So they would have the contextual data along with the payment. In our country with invoicing and those types of payments that are going from business to business or person to business, there's a lot of information that goes along with, let's say, a bill payment. And trying to connect the actual payment to that invoicing information from a business perspective costs a lot of resources in our country in paying and reconciling bills. So if you can have the payment along with that payment invoicing information, for example, together, you have the opportunity to implement this thing called straight-through processing, where ultimately financial institutions and then corporates can do that reconcilement in an automated way, and you eliminate a lot of reconciliation expense and potentially errors. So we think we made the case for faster. At the beginning of this discussion, many stakeholders are wondering why we were doing this. When we continue to have this dialogue amongst our various stakeholders in our country, we all agreed, hey, this is a good idea. We need to go after this. So with that, we established this thing called the Faster Payments Task Force, which followed on the heels of that paper we issued in January of 2015. About in that summer time frame, we stood up this task force and said, okay, we're going to pull together any and every stakeholder that has an interest in helping to think about the future and what kind of payment system we want to create in our country. So we sent out the call for our participation, and believe it or not, as Paul mentioned, we had over 300 people show up for the first meeting. 320 people or so from financial institutions of all sizes, from the trillion-dollar brothers, JP Morgan Chase, Bank of America, Wells Fargo, all the way down to the smallest banks in states like Iowa, Bridge Community Bank, who's a good friend of ours, Bob Steen. I said all these financial institutions showed up, about 110 of those of all sizes. We had corporate merchants show up. We had Kroger Foods. We had Walmart. We had Nationwide Insurance. We had a lot of big corporate users of payment systems there. We had fintechs, about 80 or so fintech companies of all sizes. Again, from the biggest of big, the Fiservs and the FISs of the world. We also had, of course, Bradley from WingCash. So we had all sizes of fintech companies show up, service providers of financial services in our country. At the table, we had academics, we had consumer advocacy groups, because, in our view, those folks in the end are going to be individuals and organizations and people that need to be represented. And it was kind of the first time ever we pulled this diverse of group together. And we had no idea how it was going to work. And I'll be darned if we didn't pull it off. We formed a steering committee. Bradley Wilkes was on. We had JP Morgan Chase on that committee. US Bank was on the committee. Walmart. About 18 or so of the 320 people were on this steering committee to help us guide the work. And we created segments of the participants in the task force, and each segment elected a steering committee member to represent their interest at the steering committee level, but ultimately the task force approved everything we did. So this task force had completed its work in 2 phases. We completed a final report part 1, which was issued earlier this year in January. And that was where we did publish all the results of our capability showcase. We had a number of task force members that had payment system capabilities but didn't have an end-to-end solution, but they wanted to show their wares in the context of this process to demonstrate what they could provide, even if it was a piece of the complete chain of a payment system. We developed a glossary of terms, so we all understood we're talking about the same thing, so that was very critical to get everybody on the same page. And then most importantly, we created what we called the Faster Payments Effectiveness Criteria. Now imagine this, we had 320 people in rooms. I think there's 600 here, right? I think that number was roughly right. So we'll divide this room in half and say, all right, this 300 people are going to sit around a meeting and talk about what we want in a new payment system and develop the effectiveness criteria. So it was essentially 125 attributes of a payment system that this group of 320 people wrote from a blank sheet of paper, blank whiteboard, to describe in very fine detail what we wanted in a payment system. I'll talk to you about the details of those criteria here in a minute. But 7 months later, when we started that process, we published this criteria, had 97% of the 320 people all agree, yes, this is exactly what we want, and published the criteria. So it was kind of the benchmark for what this diverse group of stakeholders wants in a new payment system in the United States. So very critical piece of work done in that first part. Then we went on to the second bit of work, which was, okay, it's fine to have this group of criteria, what we want in a payment system. Now, who can bring to the table ideas for how to get to that payment system? So we, in the second part of our work, which culminated this July, a month and a half ago, we actually had 22 task force members that represent various companies, including Bradley, who's going to talk about what he did in that regard, came to the table and said, this is what I would do or I am doing to provide and meet those effectiveness criteria for new payment system in the US. And we hired a consultant to help us rate each of those, or evaluate, assess each of those proposals from the solutions against that criteria that we created. This consultant helped us do a lot of work, 320 people chunking through 3,200 pages of material was going to be virtually impossible to do. So this consultant helped us think about all of that. I'll talk to you a little bit about some of the proposals here in a minute. And then the task force had a shot at each of those proposals. They got to see 19. We had off-ramps for each of the solution providers to exit from the process of it at any point they felt uncomfortable or strategically it didn't make sense. So in the end, the task force saw 19 proposals, and 16 of the proposers decided to allow their proposals and all the feedback on their proposals to be published in the final report, which is on the website now. So that whole exercise was very enlightening for the task force, all these stakeholders, see what could possibly be executed and implemented in our marketplace. What do they like about them? What do they don't like about them? But the idea wasn't to pick a winner. The idea was to raise all boats and help these proposers with this diverse perspective from this 320 person task force to help improve their proposal. Because in the end, what we want in the United States is a faster payments capability, a new payment system. So it was a very healthy exercise. We ended up with reporting out on all that. 16 of those proposals, as I mentioned, are in the final report part 2 that's been published. We also have some foundational issues that the task force worked on, or things that we think still need to be worked on, and then documented 10 recommendations from the task force. On July 21st, a month and a half ago, we published this report with those recommendations and are now setting about work on those 10 recommendations. So what did the part 2 of the report talk about? And what is it about? The task force thought long and hard about, now having seen all these proposals, understanding what's already in the marketplace in the United States, where are we at? Let's set an aspirational goal for where we want to be in our new payment system in the future. So the task force deliberated on a date and said 2020 or bust. That's where we want to set a stake in the ground to say we're going to work together to try to put in a ubiquitous, safe, faster payment system in the United States by 2020. So a rather ambitious goal. That's just over 3 years from now, if you say the end of 2020. But we all agreed in the task force work that we want to get after this objective. There's enough momentum in the United States to pursue this goal, and everybody then agreed, and off we went to chase this objective for 2020. I want to dip back to the criteria for a minute. All of this information is on our website that you have access to, and of course you've got the copies of this presentation. But the 7 categories of the effectiveness criteria were ubiquity, reach. How can we get this system to reach everybody, anybody, and anyone with payments? The speed factors, of course, efficiency, governance, safety and security, and legal. You'll note that these criteria, almost a full third of them are safety and security. If you don't have a safe and secure payment system, you don't have a payment system. I think the stakeholders in the U.S. recognize that. We spent a lot of time. We have a whole other task force that's working on payment security, but believe that's, of course, going to be paramount in terms of our focus. So we did a lot of work on all of these different criteria to line out what we wanted in a payment system. All right, I wanted to give you, I talked about this earlier, but really what distinguishes a faster payment system, at least from our country's perspective, is the fast clearing. Of course, you want this real-time experience, 3 seconds-ish, let's say. You want visibility of where the payment is. That's this F5, the prompt visibility, this FedEx, UPS model I talked about. Where is my payment that I originated? Where is the payment that I'm supposed to receive? That information is critical. And then good funds. When I have the money, can I spend the money? I don't have to wait a day, 2 days to be able to actually spend the money I'm supposedly had received. And then this contextual data that I mentioned earlier. Do I have all the information associated with the payment that I can not have to marry up later with something that comes in the mail in terms of an invoice or a payment receipt. So those, in my mind, are the key criteria that really distinguish this new capability that we don't have today in the United States, but if we did have, we believe will really be a game changer for our country. So I talked about the process here. I won't bore you with this slide again. Talking about the independent assessment we did, the task force review of these 19 proposals, of which 16 actually are published on our website. So you've heard about that. I wanted to talk a little bit about some of the insights across all the proposals. I don't want to call anyone out. Bradley actually did propose. He was one of the 16 proposers that actually has his proposal, all the information associated with it, published on our website, so you'll get to hear a little bit more about that. But clearly, we had some very creative and innovative ideas put forth, many potential opportunities for speeding up transactions in our country. Safety and security, of course, was a focus in all of them. All of them emphasized efficiency and the opportunity for APIs. And general accessibility to a variety of end users was the goal, and really came through in a broad sense across all the proposals. There were some challenges, and we think you'll see this come out in the recommendations when we looked at this, that the rules of the solutions were pretty good for within a solution, but when you cross solutions, in the US, we don't believe we're going to have one solution that is going to be the be-all, end-all. We think we'll have multiple providers. And when you get into the multiple provider environment, there wasn't a lot of good discussion in the proposals about how they do that in terms of rules and standards, as well as the governance of transactions that would traverse multiple providers. So there's some concern there. And I think in the unbanked world, which I know is important here in Peru, I think in the US we have 30 million or so people that are unbanked. I think that's roughly 10 to 15% or so. I understand that number is a lot larger here in Peru. Maybe you have 60% that are unbanked, if I've got the numbers right. So we didn't think we were particularly strong in the proposals in the unbanked world and in trying to expand the opportunities there. And then, and for many reasons, many of the proposers weren't revealing a lot of their safety and security functionality, so we weren't able to really assess or didn't feel like we had a good enough handle on the safety and security aspects of many of the proposals. And that we think is probably driven by some of the intellectual property constraints that were inherent in the process. So what we came up with then in terms of this call to action, this part 2 of our report, was that we wanted to, of course, encourage all payment system stakeholders in our country to embrace and promote the vision and the effectiveness criteria that we created. We want active participation in the dialogue, and where possible, have payment stakeholders continue to contribute in the work streams that need to follow. And then finally, the call to action is ensure that your organization, whether you're a financial institution or a corporate or a solution provider, get yourself faster payments ready by 2020 so we can actually achieve this vision. So that was our call to action in part 2. I mentioned the foundational issues that were also incorporated in part 2 of the report. Broad adoption, of course, interoperability, safety, integrity, and trust, paramount, and then the development of the ecosystem, because we're on the very front end of developing this capability, and there's going to be a lot of nurturing and support necessary to allow this payment system to grow and turn into a payment system of choice in our country. So I want to talk briefly about the recommendations, and I'm going to stop yapping and we'll get Bradley up here. So we had 10 recommendations I mentioned. We kind of grouped them into these 3 categories: governance and regulation, infrastructure, and the sustainability and evolution of this ecosystem, what we're calling faster payments in our country. So of those 10 recommendations, these 3 categories, here they are. In governance and regulation, we want to work on establishing a governance framework, and that's really going to be focusing on how do we create a set of rules and governance around transactions that traverse multiple providers. Because I can have a closed loop network and I can have my own governance and rules and standards, and that's all fine. But when you want to go to another capability and connect, how are you going to do that, and what are the rules that govern that? So that's a key recommendation of trying to establish that governance framework. Second in this realm is rules and standards, trying to understand where you want to do that with cross-solution providers. And then a regulatory landscape review to understand what current regulatory and or legal issues exist that may impede the progress towards a faster payments capability in the U.S. So that'll be an effort in all 3 of these areas that the Federal Reserve will play a role in. Infrastructure, let me talk about that a minute. 2 of these are Federal Reserve to-do items. One is this directory work that the Federal Reserve is going to help facilitate, but get industry stakeholders together and talk about directory capabilities and how can we leverage directories to help us achieve this interoperability capability that we've been talking about. So we'll be convening an industry group to talk about directory capabilities and what might work in that space. And then the Federal Reserve's committed to, we just issued another paper yesterday that confirms our commitment to continue to work in these 2 areas, and that is to develop central bank settlement capabilities to support this evolving and emerging faster payment system. So we're going to be focusing on that from the Federal Reserve perspective, and then also understanding from the marketplace and with our own policy limitations, what should the Federal Reserve do beyond settlement capabilities to help support in some form an operational role, if necessary, to help the country achieve this 2020 goal. So we'll be working on looking at that capability and or capabilities over the coming months to address that. And then finally, these last 4 objectives here really are, I would call them maybe a little more down the road, not too far down the road, but certainly from a fraud perspective, we believe these 4 areas are going to fall under this governance framework once that gets established. But we want to focus on the fraud detection and monitoring and reporting of that kind of information right out of the gate. So when we get this payments capability set up, we want to be good and as good as we can be in the fraud detection and reporting information sharing area. We also want to look and work hard on education and advocacy. We think that'll also be an important nurturing component of developing this ecosystem. And then this cross-border functionality. Most in the US, and I think maybe here in Peru too, when you think about your payments capability, the immediate focus is what can we do to improve our domestic payments capability, and that's what the US is focusing on now too, is domestic payments capabilities. But we better be building for the capability to connect to the rest of the world with this capability. So we're going to continue to focus on domestic, but with the eye towards making sure whatever we do in the US domestically is going to be able to connect to the rest of the world. And then finally, and this is an area Bradley's going to talk about, there in the proposals we received, and if you've looked at some of this material on our website, there were some very interesting ideas about cryptocurrency, digital currency, distributed ledger technology. All of those were very interesting proposals to read. I think the task force's general sense is, wow, that's really interesting stuff. It may not be what we can do today, but we need to continue to focus on how we can do that perhaps in the future, and that might be the next generation of payments capabilities, particularly in the United States. So we have this commitment to continue to focus on that. So those are the recommendations. These are listed in a chart where we try to give you a little bit of a sense for how these will be tackled starting now. So in July, we've stood up this interim collaboration work group that's going to be looking at the governance framework. Bradley's participating on that with me. We have Visa, MasterCard, JP Morgan Chase, Walmart, Nationwide, a number of organizations, 26 or 7 to be exact, that are participating with us to think about the governance framework that's going to be necessary here. I happen to be leading that work effort, which is going to, I think, in many ways be more fun than the task force and the steering committee work, because now it's really starting to get serious about how we're going to govern and set up rules to manage this new payment system. So that's going to be some exciting work that we're going to get underway, and with the idea that we can establish a governance framework by mid-year next year. So that'll be a serious work effort. The 2 work streams up top are the Federal Reserve work streams for settlement and operational roles, and then we're going to stand up some groundwork for directories, rules, standards, and regulatory landscape here shortly. So all of this work is in train, and we're going to keep pushing very hard. I've told my bosses, and I don't think they've quite agreed to this yet, but I said from a Federal Reserve perspective, we don't want to be the reason that we're not going to achieve this 2020 vision. And our issue of the press release and our next steps report that went out yesterday confirms our commitment to continue to drive the U.S. economy to a new, safe, faster, and ubiquitous payment system for our country. So with that, I'm going to stop yakking, and I'm going to just refer you to our website with all this information. If you have a desire to grab some of that, please do. You can join our community to receive any updates as to how we're doing with our work. And again, thank you very much for having me in your beautiful country. Appreciate the time today. Thank you.